Like, I don't think that the market is actually giving you that message. Guys, can you throw up the inverse correlations just because, again, I think it's an important lesson. Like, why is it that Bitcoin got crushed in Q4 of 2018 and again in Q2 of this year? It's because it has an extremely high correlation to the currency it is debasing. You can't unlock these two things and say that you're going to be blissfully unaware of these realities, or you're just buying at a high price all the time. You're chasing it, and a lot of people chase Bitcoin. You could buy it a lot. You could be a lot smarter buying. I'm not refuting what you're buying. I bought a shitload of it, right? I mean, I'm equating it to how I think about wine, which is, I bought a lot of it, but I'm not going to sit there and just romanticize and not understand that the dollar, the other side of the trade, which it's replacing, doesn't have a huge immediate and intermediate term impact on the price of the thing you're buying.
Okay, so Keith, I have a comment on Quad 4. First of all, there's a group of people in the world that you trade with that believe that inflation is equal to CPI, and therefore you can define a Quad 4. There's a group of people that I align with, the Bitcoiners, that believe that the true inflation rate is not CPI, but rather it's the asset inflation rate. It's the rate at which the long bond or the T-bill or equities have been moving up for the past decade, or the expansion of the monetary supply. So if you focus on inflation as CPI, it's 1% or less. If you focus on inflation as the monetary supply expansion, it's 15%. And I actually think that the inflation rate for the past decade is 20%. If you look at the cost of a 10-year bond that yields $50,000 a year in interest, it went from $1 million to 10 million in 10 years. That's 22% inflation. So there are different, over the near term, if you're trading with people that buy into your CPI definition as inflation, then that works. But if you're looking over the long term and you're trading with people that actually buy into the asset inflation rate as the inflation rate, you come to a different conclusion.
Well,
my last point is, in the near term, Keith, in the near term, these things work. But over the long term, adoption makes sense. Like, all of your arguments about why you should short Facebook in 2013, they're all wrong. Facebook's trading at $280 a share. They're all wrong. You should have never sold it ever, ever, ever. Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce, we bought it, we're not ashamed of it, we're going to buy more? Mm-hmm. All your models are destroyed, completely devastated. Bitcoin goes to the moon, because what really matters is, with Facebook, does it work? Do 1 billion people use it? With Apple, do they buy it? With Google, do they use it? With Bitcoin, will they use it? All the near-term trading models, they'll work for 90 days, 30 days, whatever, as long as everybody else in your trading universe sees the world you see it. But over a decade, over 20 years, over 30 years, the laws of thermodynamics are going to kick into place. And it's pretty obvious Bitcoin is a better long-term asset than gold or corn futures or soybeans or any company run by a CEO, no matter how august and intelligent they are. They're all just merely mortal. And Bitcoin is something better than that.
It sounds like it. I have no quibbles about that. The more you talk, the more I like that story. I mean, it's not, and again, it's not, we can't, if you want, you can reduce me to just being a trader. I don't think you're trying to do that. But the reality is that it's not about the level of inflation. Never has been, Michael. It's about the rate of change of a price basket of things that are inflating. And that's absolutely what Quad 4 is. Sometimes it's deflating, sometimes it's inflating. You'd have to be a certified idiot to say that oil at a negative oil price, which it was in Q2, which impacted, again, the price of Bitcoin was hostage to Quad 4. This is obeying the laws of thermodynamics. It is the secret to the universe. It is calculus. It's rate of change. So again, I think, and it would be great that if Bitcoin bulls who have the long-term story nailed down would just cede that point. The rates of change, it's not unlike the weather. The rates of change of growth and inflation absolutely impact the price of Bitcoin. And if people knew that, you'd have more people, less concerned or worried about buying Bitcoin because they'd have the confidence to buy it during a hurricane. A hurricane or Quad 4 conditions is when you have disinflation. So I don't know how somebody would refute that. Can you?
Well, Keith, like, once I understood Bitcoin, I would go to bed with anxiety at night feeling short because I worried that somebody else would figure out what I'd figured out, and they would buy it all, and I wouldn't be able to buy anymore. And so once you get something and you look out decade or decades, the only issue is, how do I buy more of it?
Yeah,
like, that's all we're thinking.
So you should be going to bed at night like feeling great about the next quad 4 is what I'm saying. Why is it so hard to just say that? Like, it's like, this is just, we're using math. We're not using, narratives here. We're talking about, if you understand that the rates of change of economic gravity, we're talking like 101 thermodynamics here, that you don't have to have those anxieties. Like, I have zero feelings about Bitcoin. Zero. Like, and I'm happy about that. That's what I want to store my wealth in. But I want to do it.
Keith, you got to own something, man. At the end of the day, you got a family, you got a company, you got a future. Look out 30 years and try to figure out what you love. Wine, you're going to own that. What's your passion? What is it that you're going to own, that you're going to hold? I would buy into the notion that maybe when, if you got a model and it says Bitcoin is cheap or it's better or whatever, buy more of it. I just think the danger is selling a good thing. Like, I'm not very good at selling my things, Keith. I'm good at buying. I'm not. Once you find something that you love, you should hold it, because if you sell it to buy it cheaper, then you're betting that other people that have this short-term model are going to act however they're going to act. And you might be right, but you might be wrong. And at the end of the day, if you're buying something that you expect to go up by a factor of 100, then selling it or buying it this year is going to be plus or minus. Like, if you bought like Apple stock at $2.25 versus $2.10, it seemed like a big difference back then. But what if you made the mistake and you were short the share and you missed the next $100 run up? I mean, that's the danger of near-term trading. So
yeah, and the opportunity. I don't think this is a debate about trading. Like, if we want to reduce this to you guys are traders and we're the ones who get the long term, that's fine. I've been reduced to, I know nothing about long term, about anything, including my own company, my own family, my life. I'm just going to get up every morning and do the best I can to understand it and put a risk management wrap around this. If it's truly an asset allocation that one should hold over the period that you're talking about, like forever, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's not something, that companies and executives have been trying to sell me their stock for 20 years, have been telling me to do, and I'm just not willing to buy into that.
It seems to me like every billionaire on the planet got there by buying and holding something, Keith. I mean, tell that to Rupert Murdoch or Warren Buffett or Jeff Bezos or Sergey Brin or Mark Zuckerberg.
But what does that mean? Like, not everybody's going to be a bit. Like, I'm not a billionaire, but I'm certainly not worth $1 million. I did that. You're talking to a guy that understands. I built my company 13 years ago, and I bought and hold it. I get it. I totally get it. But I would not.
So why would you tell the average person that they ought to trade everything 1,000x?
I didn't say that.
It's a lot of work. It's very complicated.
I actually didn't say that. I said that.
The tax code is very hostile to that.
I didn't say that at all. Actually, what I said was, if you believe in Bitcoin like I do, I bought the living daylights out of that in April and May. If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, you wouldn't sell it.
Yeah, that's fine. I mean, I don't have to believe in it the way that you do, but I'm trying to say that there is a better way to buy it. And in a level of awareness on that, I still haven't heard why economic gravity does not affect Bitcoin.
Okay, so my point here is that if you're a professional trader and that's what you do, or if you spend 10, 20, 30 hours a week and you devote the effort to it, and if you've got all the offsetting positions and you can manage the tax issue and you've got all the platforms, then maybe you can do something there. The average person doesn't have the time, the wherewithal to do it, and the tax code is hostile to moving in and out of positions. I mean, one of the most intelligent things you can do is just buy something and wait for 10, 20, 30 years, because all your gains accrue tax deferred. And so telling the average person, like I can't go tell my father, I want you to go and study up 20 hours a week on trading strategies and take 50 different offsetting positions every year. What I can do is say, Dad, buy a bar of gold, put it under your mattress, And that's what he would have done 30 years ago. Now we have a better idea. You can buy a bar of Bitcoin and you can put it in your hard self-custody wallet and you'll have it and no one can take it away from you. It's a investment strategy someone can execute.